With Apple entering the watch market, it's worth taking a look at two things: the current state of play in smartwatches and whose world gets upended if Apple's bet pays off. First, the lay of the land. Right now, the smartwatch world is already populated by the likes of Samsung, LG, Sony, Pebble, and Motorola. In some cases, these companies are already working on their second or third generation of smartwatches. But all of that furious activity hasn't done much to attract customers yet. According to market researcher IDC, the total number of shipments of all wearables, that includes fitness trackers, eyewear, and smartwatches, amounts to 19.2 million units for 2014. That compares to 301 million shipments of smartphones for just the second quarter of 2014. But IDC thinks that market is going to grow. By 2018, the company says, total wearable shipments should reach 112 million units. Apple would like to be driving most of that growth, and frankly, why shouldn't it? According to investment bank RBC Capital Markets, a smartwatch line could add as much as $11 billion to Apple's overall revenue. That would be a 30% increase over today's numbers. Now the second part. Who's threatened by all of this? Well, for starters, you surely have to think about some of the fitness tracking companies out there. Whether you're Jawbone or Fitbit or another wristband maker, the idea that Apple has made something that does everything your product can do and more has got to keep you up at night. Another concerned observer in all of this? Switzerland, or at least some of its watchmakers. Global watchmaking right now is a $62 billion business. Might somebody who wants to spend a few $100s on a watch be attracted to an Apple product? Particularly if that Apple product comes in a variety of styles? While some of the high end of Swiss watchmaking, your Patek Philippe's, your Breguets, they would probably be untouched by the arrival of a new Apple product, the mid-range, the Tissot's, the Tag Heuers, the Victorinoxes, could get clobbered.